You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast, coming to you from Santa Barbara, California. I am about 90% alive now, after now 8 weeks, a couple months of COVID, or I should say post-COVID diagnosis. It has taken me forever to get better. I still have a little bit of a cough, but I've even started hiking. My lungs hurt when I do it, but I think the fact that I can do it is a very good sign that I am almost there, almost recovered. And so thank you for your support on that. This was a hell of a disease, and I'll tell you, it is one that I don't wish on any of you, so please take it seriously. It is amazing to me how many people still don't. And I even saw some, on my Facebook, and I have a bunch of people I don't know, because I always say yes when people, or I used to always say yes when people would ask to friend me. I don't do that anymore unless I know you or you're in my group or something. But I have all these people in there, and there's one guy who is like, I don't know, he just says, COVID is fake, who wants to debate me? And I'm like, oh God, are you serious? This thing almost, damn, it's killed all these people, and people that that I know, that almost took me out. Maybe I'm being a little dramatic. I didn't almost take me out, but it really beat the crap out of me. It's real. So anyway, no limits to stupidity there. But at any rate, I just unfriended that person because it's just not even worth those kinds of arguments when somebody just says something's fake, and it's obviously not. So anyway, let's talk about today's show. Today's show is about investing in Dallas, but investing in general, I have to tell you, it is no joke. It's a hard thing. And the funny thing is that it's hard for a lot of reasons. It's hard because you have to know what you're doing, which is the technical aspect. But it's also hard because you have to be tough psychologically and sometimes do things that seem counterintuitive to your own emotions. And that is a very difficult thing to do. I mean, think about it this way, right? The smartest thing you could do, really, if you just look at over a long period of time, is look around you and say, what's for sale? What is getting the bleep kicked out of it right this minute, and go buy a bunch of that and sit on it until it's not getting kicked anymore. And, it's hard to do that, right? It really is, because who wants to buy, a bunch of stuff that's not exciting, that looks like it's dead? But a lot of times that's just the way investing is done best. I mean, believe me, I am not immune to the psychological miscues involved in this space. And I'll tell you that at one point, not anymore for sure, I owned about 100 Bitcoin. Now, during crypto winter, I, decided I'd use that money, needed some money for some other stuff I was doing, and sold most of it off at a tenth of what it is worth today. And I really did sell majority of it. I kept, maybe, I don't even know if I kept any at the time. I have a few now, but I didn't have, nowhere near do I have 100, which I've been happy to. But, if you recall, I mean, here I am telling you that, Bitcoin is going to go up, and it's going to be, it's going to hit big numbers someday. So why did I, in turn, not go and buy a bunch of it if I truly believe that, which I did? Well, it's because, my psychology was not letting me do that, right? A few months back, I could have easily have gone back and bought back that 100 Bitcoin before it 10x'd from where it was, and it wouldn't have been a huge expense. It would have been something I felt like, wow, paying $500,000 for something seems like a lot, but, I could have done that, but crypto winter took my mind off of what was, obviously, in my opinion, on sale. And when I say obviously, I really knew that it was going to go up and that it was going to go past all-time highs, to the point where I literally just won a bet with someone from a year ago that Bitcoin would hit 50,000 over the course of the, I think it was by the end of 2021. And here we are today. Bitcoin's about 54,000. So By the way, I believe within the next, I'd say 4 years, Bitcoin goes to 250,000. I really believe that. And that's another show. And I'll have a Bitcoin expert on the show fairly soon. We'll talk about that more details. So if I believed that, sitting on $5,000 or $6,000 Bitcoin, and I made a bet that it would hit 50,000 by the end of 2021, why didn't I listen to what I clearly felt intellectually was going to happen? And the answer to that is, well, it's kind of fear, right? I wouldn't call it fear, but almost a psychological laziness, because I was not driven to do that by, some kind of other energy. Fear is a tricky thing. And it's the major driver of investors losing money. And I'm not just talking about fear of investing in something when something is getting crushed, like Bitcoin was back, during crypto winter. I'm also talking about the opposite of that, the old fear of missing out, the thing that they called FOMO. Now, FOMO itself is complicated too. There's a cryptocurrency right now that some of you know called Dogecoin. It's basically spelled like doggy coin, and it recently skyrocketed. The problem is that there's nothing really behind Dogecoin. It's not a storage of value like Bitcoin. It isn't a project like Ethereum that has tremendous applications in software development. It's kind of a joke. It's a joke even within the crypto community, and people know it. But it's still going up way in value. Yet people have been buying it because it's gone up so much in price. And that, in my opinion, is what I would call bad FOMO. It's bad FOMO because eventually, you be missing out on these profits, but eventually, the floor is going to drop on Dogecoin and people are going to sell, and it becomes then a game of magical crypto chairs. And whoever's left holding the sack at that point, well, you lose. Now, another scenario that often kills investors is feeling that something has gotten too expensive, despite the clear vision that it has not. I think you could argue that the case for Bitcoin right now is that, right? You're sitting at 50,000 plus Bitcoin, but like me, I'm saying Bitcoin goes to 250,000 at some point. If I truly believe that, I should continue to buy, right? So that's psychology. What's behind that? Well, let's go back on another example. So on May 16th, 1997, Amazon stock sitting at $1.73. 1 year later, it's over $7. Now, if you're paying attention at that time, you're probably looking at that price, the $7 price, and thinking, well, the opportunity for making money from buying Amazon stock is gone, right? The 700% appreciation in 1 year just couldn't continue. So why put your money in something like that? Now, today, as I speak to you, Amazon is sitting around $3,278 per share. And people who understood the potential of Amazon early on did very, very well. And, if they never sold that stock and it 10x'd over and over and over again, well, gosh, they did. They just absolutely crushed it, right? But for those of us who unfortunately did not get on the Amazon bus, we look at the price of stock today and think, man, that's pretty expensive. I'm not going to go buy that. And in my case, I'm really not going to go buy that, because I just don't know enough about the potential upward trajectory of that company and that stock at this point. And I don't know if it's smart for people like me to go jump on that bandwagon right now, because I really don't know what that looks like in the future. I don't know enough about Amazon. I don't know enough about growth potential and stock prices to understand that, like I would say that I do know and believe about Bitcoin. So if I just went and bought Amazon stock right now, it would be FOMO, right? It would be fear of missing out, because Amazon's gone to 3,278 here, and it could go up. And to me, that's bad FOMO. It's bad FOMO not because I'm buying it, but because I don't know why I'm buying it. It just seems like it's a high price I should get on now. And that is bad FOMO, even if Amazon continues to go up, because it's not a good investment technique, right? So you see, the thing is that I still believe that outside of some speculative plays, maybe you're doing some, you're doing some crypto and you don't really understand crypto, but you can make potentially a lot of money. As long as you know that, real investing should be limited to the things that you really understand, the things that you really know. That's my opinion. And so for me, what I understand in the investing world, probably better than anything else, is multifamily real estate. People have made a lot of money in multifamily real estate for a very long time. I grew up in a multifamily real estate family. That's what paid my bills. That's what made me an upper middle class kid, paid for college and med school. I know I was a spoiled brat, right? But that's the truth. And in my family, obviously, it's, not obviously, but in my family, it's sort of, a mistake to invest outside of real estate. Whenever my mom hears me talking about anything outside of real estate, she gets worried that I'm going to be losing money. So that's kind of funny, right? It's a total perspective thing. But anyway, for me, what I understand most is multifamily real estate. And like I said, people have made a lot of money in multifamily real estate for a very long time. And if you look in the past 2 decades where most of us, probably the majority of our adult lives as investors at least have been in, no market has more winners than those in the market of Dallas-Fort Worth. Now, the question is, going back to the whole topic of, is it too late and fear of missing out and all that stuff? The question is whether or not that trend continues. Does Dallas still continue to be a big winner? And for me, knowing what I know, it's an obvious yes. I believe that Dallas-Fort Worth will continue to be an incredibly profitable market for investors over the course of this decade, going deep into this decade. And based on that, I'm going to continue to invest heavily in working class apartment buildings in Dallas like I do now, like those of you who are in Investor Club are doing with me in the Accredited Investor Club. And I'm going to continue to do that for the foreseeable future, even though today the DFW market is more expensive than it was 5 years ago. It's more expensive than it was a year ago. But you see, like Amazon in the year 2000, Dallas is, way more expensive than it was then. However, as a guy who understands what drives prices, unlike Amazon, I don't know what drives that price, to go from 3,800 to 6,800 if it does. Unlike that case, in real estate, I can see the clear path in Dallas with apartment buildings in the working class space to continued growth. And as a result, an increase in asset values and profit for investors in real estate in that market. To me, Dallas, in fact, is the single best risk-adjusted market for multifamily real estate in the country. And I would say in my mind, and for as simple as that is, I believe that investing in working class apartment buildings in Dallas is the single best risk-adjusted investment that you can make today. Again, it's my opinion. I'm not giving you any advice on it, but to me, the mixture of stability and profitability from the growth, it's really hard to beat. It's really, really hard to beat. So, of course, I'm talking about Dallas, as Dallas is getting absolutely hammered from weather. So a week of terrible weather. And knowing that, I've been talking to my business partner, one of my business partners in Dallas, Dante Andrade, who most of you know through my partnership with Turo, talking to Dante quite a bit about our properties. And I decided, hey, I'm going to talk to Dante, get him back on the podcast, and talk about what it is about Dallas that we love. Because I think it's easy to look at times when, there's a lot of snow and there's ice and all this stuff. And this is the time when people potentially get scared of stuff, right? This is not the time to get scared, because we don't invest for what happened last week. We invest for what's happening in the next 3 to 4 years. And Dallas, in my opinion, again, single best investment I know of is multifamily real estate, working class, Dallas-Fort Worth, in the right hands. So to talk about that in more depth, when we come back, Dante Andrade. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast, well, he's my guest. He's also one of my business partners, is Dante Andrade. Dante is partners with me in our company, Turo, which is multifamily down in Dallas. And so I thought it would be a good time to get him on the show and talk a little bit about Dallas, especially with what's going on down there right now. Dante, welcome back.
Thank you, Buck. Excited to be here and to talk to you and to listeners again about, multifamily in Dallas.
Yeah, well, before we start, I wanted to kind of get an update. For those of us who don't live in Texas, what the heck happened down there? I mean, we're used to hearing about, some hurricanes in Houston and that kind of thing, but Dallas, what happened?
Well, that's new. Well, not that new. It happens about every 10 years. And, we got a deep freeze this week, some historical level for several days straight without getting above freezing. And we were not ready. I mean, we were ready for, the over 100 days in Texas, in the summer, but not for winter, not for this kind of, and the power grid just did not sustain. And it's been a mess. We still have 146,000 people without power since Monday evening. So that number went down from 4 million to 146 now, 1,000. So it's looking much better.
And so far, in part of why we've got you on the show today is you and I have been connecting about our property down there. But it sounds like overall, at least, not too much damage going on there. A few pipes, that kind of thing.
Our properties fared well. One of them, Sedona, we never lost power. So, and this was really frustrating for most of Texans, is that it was not evenly spread. So they said it was going to be rolling blackouts like you do over there in California. And it wasn't the case. Some people lost power. They still don't have it, and politicians are blaming each other. No one, there are different reasons behind it, but Sedona Ranch never lost power. Tierra del Sol did lose power on and off, and we've had, as of last night, about 15 broken pipes, but we're addressing those in-house. We have an amazing maintenance crew in-house, and we're being able to address those. Some of my other properties didn't fare as well. We have issues with boilers and tons of units that have been flooded, but we're dealing, everybody's in the same boat. Some of the newer properties, some that I'm invested in, had issues with the fire sprinklers busting and then just spreading snow and ice and water everywhere. So it's been messy, and I think it's gonna take some time to clean up. And I'm afraid there will be some long-term repercussions also because of this.
What kind of repercussions are you talking about?
Really, with insurance, a lot of the large commercial properties, like, we're not going to be filing claims on ours, just, we're fixing everything in-house, but there is a lot of damage. I just got video today from SMU, the Southern Methodist University here, with a full dorm, 3 stories, completely flooded, water coming out of the windows, the stairs look like a waterfall. So lots of insurance claim. Texas have already been... It's been challenging to do insurance in Texas over the past few years, given the hurricanes we've had in Houston and the Gulf Coast, in the past few years. And now we have another added, issue. So whenever we're about to start getting a break on the insurance prices, we got something else that I'm sure it's not, it's going to stay with us and on the pricing of insurance here for the next 2 or 3 years.
Yeah. Well, it's interesting, too, because one of the things that I actually like about Dallas is it's not generally a place where we have the, crazy Gulf weather and I don't mean golf like playing golf, but like the Gulf of Mexico.
Yeah.
It's not like the like Carolinas or Florida and all that. And so this is unusual. And, but hey, it can happen anywhere, right? I mean, listen, we... pretty much anyone who is, living, in the United States or pretty much anywhere, you get these occasional wow factor type climate things, and We might be having them potentially a little bit more, but I don't think anybody's really immune to any kind of stuff like that anymore.
Well, that's true. And I think we're going to be better prepared. Everything that's happening now happened in 2011. The politicians just said changes are going to be made. This will never happen again. And unfortunately, it happened again.
Well, Senator Cruz was ready for it because he apparently was on a plane to Cancun. So he was ready for it.
So I wanted to do the same, and my plan was to drain my house from any water, go to Mexico last weekend, but my girlfriend had to be in the office this week, which ended up not going any day, so we cannot go. But I'm not a politician. It's okay if I leave, in the middle of a crisis and go somewhere tropical. Not probably the best judgment Senator Cruz had. He did not. I don't know. I guess he didn't see this coming, but I would not wish to be on his shoes right now.
What a wonderful move by that guy! It's so funny. Anyway,
he's back though. He's back. He came back.
He came.
So he flew there and came back the next day. Yeah, so he's here.
Yeah. Well, and I don't want to talk. I don't want to get too. I don't want to get in the political part of this. That's when I get myself in trouble and get mean emails and stuff like that. But let's talk about Dallas again, because the bottom line is that regardless of what's going on today and this week, everybody in real estate is massively, massively bullish on Dallas. And I want you to answer the question, why? Why? Because, specifically, you see this because now everybody and their mother, we were talking about this before, REITs that were never involved with this space, they're all trying to buy up Dallas. Tell me why.
Well, it's it's an answer that has multiple answers, but I'll start with just the business climate. So Texas overall has a very pro-business climate, has a great airport. You can get direct flights pretty much anywhere in the U.S. And internationally also. So that as things are changing, people are being able to work from home. They're wanting to skip the Minnesota, the cold that your parents are dealing with right now, back in up in Minnesota, and say, hey, I can just work from somewhere more warm, and where the cost of living it's a fraction. So a lot of people migrating here from New York, from California, from the East Coast and the West Coast, from Oregon, from Seattle, and as those places have trouble dealing, have more restrictive laws and covenants for business, Texas and Florida are two places that are welcoming. The whole South in general, and now we're having kind of same growth in Georgia, in Florida, but just Texas. Usually we're not having a lot of weather crisis, especially if you come to Dallas. It's pretty isolated. We don't have hurricanes go through here, just a tornado once in a while. And just the business climate. We have a lot of smart people around us. A lot of colleges, they have been over the past 2 decades making a big push for science and technology and increasing those colleges. So we have a lot of people in those colleges coming from overseas also, and they just stay. Once they finish their degrees, they're able to land jobs. And the biggest one is the job growth. So the Federal Reserve just published, research here numbers a couple weeks ago, saying that they're expecting, projecting 4.2% employment growth in Dallas. That equals 518,000 jobs. So a creation of more than 500,000 new jobs being created for Texas, and
in 21.
In 2021, exactly, yeah. And and if you look what happened last year during COVID, nationally we lost about 62% of the jobs that went away. Texas only lost 4.5%. So we already lost much less than the rest of the country if you compare to the national average, and then we're gaining back at a very fast speed. So if you just compare those two numbers, we lost 4.5 and now we're gonna grow by 4.2. We're pretty much breaking even here by the end of 2021, and the growth is just gonna continue. We have massive. I mean, I could go on for the rest of the podcast listing the number of corporations that are moving to Texas, or they are moving, huge piece of, their business to Texas. And here's another factor. Texas is willing to play ball with these companies. So Walmart, and this was secret for several months. There's a big corporation coming now. We learned it's Walmart. It's building a massive distribution center in the south part of Dallas, near DeSoto. And it's going to create 1,300 new jobs. And it's a multi-billion-dollar investment because it's all refrigerated. But they took a long time negotiating with the city and the county on tax abatement. So they're not going to pay property taxes for some good 10 years. Right. And then the city negotiated, the city still going to make a lot of money off of it. But at least they don't pay property taxes for, I believe at least 10 years. And it kind of phases in, after that. So a lot of these big corporations have been able to successfully negotiate with politicians in the cities. They're fighting with each other to have these companies come here. I mean, that's just, more money in the pocket of the shareholders. So that's another big, and the cost of living. Like I said, it's an answer that keeps on going, but cost of living is still very affordable. You still can come down here. Of course, if you live here, and that's something else that we can talk about it. If you live here and I've been here 20 years, going on 21 years this year. So yeah, I've seen the prices go up and up and up. Like my house is now more than double, what I bought it for about 8 years ago. Now, if you're coming from Chicago or from California, everything sounds like it's free. Like you don't care about, the prices that were 10 years ago. And the same is happening in multifamily. We have all these large operators from the East Coast and West Coast that just now, hey, we got to be in Dallas. And they're looking at the prices. The same apartment that we are paying $100,000 a unit here, that same unit in Chicago would cost $180, would cost $250 in California. So they're saying, hey, we can bring it here. There is employment, there is job, people are paying rent. And if they're not paying rent, also the laws help me evict them. So, it's a win-win all around. And that's why we're having such a big influx of new capital and new investors chasing Texas, specifically Dallas-Fort Worth. Mm-hmm.
Yeah, it's a tricky thing for people to understand, right? Because if you go back to 1990s, even early 2000, Dallas, for the most part, was looked at and was really a tertiary market, right? I mean, it was spoken in the same breath as you would say something about, like, say, Oklahoma City or something like that, because maybe it was a little bit more advanced than that, but it really wasn't. But so what's happened is tremendous growth, and the tremendous growth, as you have talked about, really relates to jobs because of the great business climate, and then people following it, and then the increasingly difficult business climate and higher cost of living in major cities in like in California, or like you said in New York or Chicago, whatever. It's driving people to Texas, and you're seeing that even in the demographic changes, right? I mean, Beto O'Rourke almost beating Cancun Cruz over there last round. That would never have happened,
Correct.
10 years ago. But you're seeing a lot of people move over there. So the question ends up being, well, gosh, if there's been so much growth, how long can it go? I mean, how much runway is there? And this is a really, really important question, because people often guess wrong in these situations, and for the wrong reasons, and they regret it. To give you an example, when Apple was at $5 or $10, or Amazon was at $5 or $10, and all of a sudden it went to $100, how many people said, "Gosh, that's at $100 now. I already missed that. Well, I think Dallas is a similar story, and perhaps you could shed a little bit of statistics on this for me, Dante, in that the growth is not leveling off. The growth is massive, and it's, statistically, you could see that.
100%. And then, if you look at the historical average, rents in Dallas, and this is going back, 20, 30 years, rents have been growing year over year about 1.8%. This past year, the rents were still growing almost 1%. 0.9% is the exact number average across DFW. Now imagine that most of the country we're not having rent growth. We're actually not having major issues with collections, and we're having major issues with actually, concessions, and actually we have negative, rent increases. So people are actually keeping the same if they're renewing, or they're giving concessions. So rents are actually decreasing, and that's happening in many areas of the country. That's happening right now in New York in so many aspects, not only multifamily, but in retail and industrial and everything else. And we still experience, almost 1% year over year rent growth during the most challenging year since I've been in business, and probably of several decades, with the exception of the downturn in 2008. But this was a very challenging year, and we still had, rent growth. So I don't think it's stopping anytime soon.
To your point, here's the thing. When you mentioned it, 2 or 3 times, and I think I'll say it again. The reason is that you're starting at a metric that's very low compared to the rest of the country. So your cost of living is still extremely low compared to everywhere else. So you can continue to grow. You have a lot of runway. It's not like Dallas doesn't have a reason to grow, right? I mean, that's part of the issue that I think that a lot of tertiary markets have. Every time there's a big boom, and in real estate, you and I talked about this a year or two ago, where we were, we'd contemplated the idea of Oklahoma City, and I was very much against it because my thought was, hey, this market is only interesting because other markets are getting hot, right? When things kind of cool down a little bit, it sort of becomes one of those situations where, the tide goes down and you can actually see who's swimming naked. And Dallas is not swimming naked, right? Dallas has got all of the components, the massive growth and components to make this continue happen.
Totally. Yeah, that is correct. And then you also have the backing from the politicians and the governments putting the infrastructure in place. So it's not like we're having this massive growth. Of course, this is a tough week to talk about it now with what happened with the electricity. But, roads, highways. I mean, Dallas has been a construction site from the day I moved here 20 years ago, and has not stopped. But toll roads, highways, reaching out to different places of the Metroplex and expanding. It continues to expand. They're not stopping, just infrastructures with schools and parks and streets and highways, and everything is in place to accommodate the people, moving here. So I don't think it's stopping anytime soon. I think we're going to have massive growth here, 2021, 2022, 2023. I think towards after 2023, 2024, depending, just for real estate growth itself, not overall, depending on how much new construction we do, which we're doing a lot of it right now, it may get caught up with us, the absorption of new units and how many is being delivered. Last year was, I believe the first year that we had a negative absorption number, and this is mostly on A class because we're not building anything affordable. It's all high end, high rises,
right.
Upper class, kind of very urban walking area, mixed use, a multifamily. So we had a very small negative absorption on that, but which I think it's already being taken care of this year. And last year, a lot of projects kind of paused on construction. So that's giving a lot of the lending for construction, the mezzanine loans and bridge loans went away, during that COVID when everybody was scared. So that put, scratch off a lot of construction projects off. They're coming back back now, but it takes time. Something that was off the table last year, now it's going to take, 18 months to get approvals and to get things going. If someone decides to build now, they cannot break ground until 12 to 18 months from now. So that's what I'm saying. 2024 is probably, and this is something to reassess, right? I'm just trying to read into the future, something to reassess a few years from now. But if we continue having the growth on employment and migration that we're having here, which I strongly believe we will, just all the time. I'm just talking on the phone with clients. As your listeners know, I do a lot of brokerage on the multifamily space, on the representing buyers, and all the time I have clients from California. Just spoke with someone yesterday. They were looking at a property. Who's like, we just made a decision this week. Me and my family, we're gonna be moving there, within the next 12 months. Mm-hmm. So this happens almost like a weekly conversation that I hear from people from all over the, all over the country. I don't think that growth is going to stop. I can give you one example. Schwab, who just combined with TD Ameritrade, they had about 400 employees in Dallas. They're building a massive center last year that's going to house 7,000 employees. So from 400 to 7,000, they're not doing this overnight. They're doing this over the next 3 years. And many other corporations are following suit along that same path. So,
I would just point to that some of these things that you're talking about when it comes to new construction and that kind of thing, we have, at least in terms of what you and I tend to do and what we tend to do in an investor club in general with multifamily, is we're not really competing with that new construction, right? Where we're competing is affordable housing. And, we're not talking about trailer homes. We're talking about, B minus, C plus class stuff, blue collar stuff, which in fact, the demand should continue to go up, as more and more places become sort of, increasingly difficult because they become, urbanized. The hipsters start coming in and they become, harder and less affordable.
Correct. So just to give an example, the rents on our properties, they're probably about $1.30 a square feet. Overall across all the properties in the different size of units, these new constructions deals that I'm talking about, they're coming to the market at $250 and above, $270, sometimes even pushing to get to $3 a square feet, if this the really high-end high-rise. So there is a massive gap. It's more than double the price of the rent for the same space, and you're completely working with a different demographic altogether.
Right. So totally different demographic, totally different market. And so that brings us to, is now a good time to buy and why in Dallas?
It is a very good time.
Well, let's be specific, right?
Yeah.
To buy affordable housing in Dallas, because I'm not so sure that a construction project, from what you're saying, is makes sense, right? But
it's even construction. I think it's still making sense, and a lot of colleagues of mine, they are in the space, only affordable housing, they are getting to the construction space and have several projects going, and they feel very confident about it because the growth is not going to stop, right? So everybody is betting that there will be absorption from all of these. But going back to the affordable side of the things, 100%, it's a great time to be buying. It's not a buyer's market though, and that's what makes it challenging. Right? And I go back and look, at all the opportunities that I let pass in 2015, 16, 17, and I know you take joy of remind me of that.
Well, I don't take joy in it because I'm your joy. I mean, I'm your business partner. I'm losing. I lost a lot of money because of that. Of those overly conservative views on what was happening, but hey, listen, at the end of the day, it also it kept everybody safe either way. But listen, I think that the point that I would make is that there's a lot of buyers right now, but this is, in my opinion, is going to get worse. It's not getting any better anytime soon. And so the question is on the timing is with real estate, you hit the nail on the head when you talked about 2015 and 2016, wishing you'd bought, right? Right now, it's another situation where I think a lot of people are going to wish they weren't sitting on the sideline, because all of those predictions, that people were making about this massive sell-off and, zombie apocalypse and, buying buildings in Dallas and the rest of the country for pennies on the dollar didn't really happen. In fact, the opposite has happened. Right?
Exactly.
The
Cap rates
opposite
have
is
compressed. Yeah.
Cap rates have compressed because interest rates have gone down. You're going to have inflationary pressures as well. Prices are going to continue to go up. So the bottom line is you pick the best market, you have big quality assets in those markets, and you try and then you buy at a fair price. That's what you got to do right now.
Yes. And and just going back to what we talked about 15, 16, and back then, and I feel like that was just the other day, right? And I'm looking at these numbers like, oh man, I'm overpaying for this property. As a property, I bought it for $37,000 a door, 1964 build, smaller in Arlington, and then sold, a few years later for $70,000 a door. And now probably it would be worth $90,000 a door. So because I've been here and I've seen all that, it's like, oh, this is the same property, that was 37 just a few years ago. Someone coming from the outside does not have that, preconceived, mindset of pricing, and they just look, okay, this makes sense. Now, if I remove that, if I remove the emotional part of it, which is challenging to do sometimes in business and investing, but, successful investors try to leave emotions out of it. So if I remove the emotions out of it and thinking, oh, I cannot pay this much for it now. All right, have the rents increased? Yes. Have the cap rates reduced? Yeah. So the rents at that property when I sold, it was $750 average. Well, now it's $950, it's $970 for the same property.
Well,
right.
And that's very important to remember, because this, the thing is that I think a lot of people think that when they see these values going up, that it's like buying a single family house, and that it's people just saying, hey, I would pay more for that now. No, that's not what this is. This is growth in net operating income. This is not just a matter of looking at places saying, hey, this is a pretty place and I'll pay more for it now than somebody else did 10 years ago. There is reason for those prices to go up. Those reasons for prices go up have to do with rent growth, net operating income growth, and lower interest rates. So it's real.
Yep, it is real, and there is really no other place where you can still park your money relatively safe and get the kind of returns that you get in multifamily. And that's another reason that we're having such an influx of buyers. So a lot of people, just talking to a local broker here yesterday that does a ton of business, and they said, man, I have so many new groups pursuing my properties now. A lot of people from hotels, retail, and when we talked on the podcast last year, I mentioned that we're going to have an influx of hotel operators and investors flooding multifamily, and they're here now. He said, and I have full hotel groups. The hotel investment, hotel development business is dead right now. No one is banking, no one is raising money for hotels. So they're all shifting to multifamily. People from the office, from the retail space, also shifting to multifamily, because that money, they're sitting on money. It's got to go somewhere. Which asset is still relatively safe, actually fared really well during this whole COVID recession, and it's still, paying dividends, and that's in the multifamily.
And the reason, as you mentioned, first of all, those hotel operators, the funny thing is that if the way investing works, now would probably be the time to pick up some hotels right? They're getting crushed. But I think what you have pointed out is I think the reality that has hit a lot of real estate investors that were in different niches, like, the hotel and the retail and office spaces that all, they all got beat up pretty badly. But even through, COVID, we didn't do badly at all, right? Talk about that, because this is apparently our stress test, right? This is about as bad as it gets. What happened, with our properties, and give us a sense of what happened, and if you could look at it and say, well, this is basically sort of as bad as it probably gets.
Really, the worst that it happened, it was just perception back in March, thinking that no one was going to pay rent, right? In April, when everything shut down, and then losing several nights of sleep thinking, okay, well, I'm done because no one's going to pay rent. And, all my, I would say 80% of my net worth is all in multifamily spread across, the South, and most of it in Texas. So that was the worst of it, because that actually never came to fruition and never happened. Collections have been doing just fine. And we've been collecting well, we've been cash flowing our properties, and we paused distributions just to be on the safe side and to have, cash, stowed away just in case what we were afraid of actually happened. It never happened. And we're back to doing distributions. A couple of our properties, we're doing distributions monthly now because everything has been just playing according to the pro forma. So let's look at the national level. If you keep comparing collections in 2019 against 2020, the drop was only about 1%, through September. Now, after September, that's when the biggest unemployment, cushion ran out. And then we can see an increase of delinquency after September. October, November, December, that number, which was usually a 1% difference between where collections were in 2019, 1% lower for the same month in 2020. Now that number is about 2%. This past month, it's probably the highest it's been. It's been about 2.6%. So if you compare the rents of 2019 with the January 2020, with 2021, we're about 2.6% lower. Now, that is a trend that I think it's going to change. And I'm talking on a national perspective, right? It's very, very different each market specific. In Texas, we're actually having DFW actually having rent growth on those numbers. Now, that was before we had 25 billion of federal assistance approved, right, for utilities and rent. So that's being worked out right now on how it's going to be distributed. For most of the year, the government did not think about the landlords. It's all about protecting the tenants, the CDC putting some protection. So anytime there was a eviction moratorium coming up, that was challenging, and that was scary. It never really, it affected a few units, but most people actually wanted to pay their rents. And if they could, they did. Very few situations. So I feel like that trend is now going to revert because of how much federal money is in place. We have a lot of the states are also stepping in and say, all right, we got to step in here. If not, we're not going to have housing. And I think the current administration is even going to do more to help on that side. So if anything, I think we're going to have tremendous growth based on that too.
Got it. Well, listen, I guess the bottom line is that what we're looking at here is a market that has gone through stress tests, a market that's shown that it can handle, recessionary times. Took a few on the chin, but it didn't knock out like a lot of the rest of the country. It's still growing. It's going to grow like crazy over the next few years. And to me, when I look at Dallas, one of the things I like about it is Dallas is, really the kind of market that has a unique element to it, which is growth, significant growth, but there's a level of stability to it too, right? You don't look at Dallas. I don't look at Dallas necessarily like some of the other markets out there that might be growing faster. Even like a Houston, which Houston's done well for us for sure, but Houston has more risk at play. There may be an opportunity to buy something that is lower than replacement cost and crank up those rents. We've seen that over and over again. But from a pure stability perspective, job growth and an incredibly diverse demographic an incredibly diverse workforce and industry force, it's really hard to beat.
No, it really is. And, like I said, in the numbers, the projections keep showing that this is not going to stop anytime soon. Actually, there is no projection showing slowing down, on the foreseeable future. So I'm very bullish still, even though the prices are sometimes hard to deal with. And, and I'm sometimes frustrated being outbid by REITs and private equity that never looked in dollars and never looked at C-class 1970s build multifamily property before. That was the space that I operated with the clients, and now we're getting bid left and right by those operators. So we're having to look at our business model and shift things to still remain competitive, because it's not like they're overpaying and they're failing. They're in our eyes, sometimes they're overpaying, no, but they're succeeding, and they're being able to, rents are keeping up with it. Occupancy is keeping up with it. Our occupancy average, and never really in Dallas-Fort Worth, never really went below 93%. If you look across Dallas-Fort Worth, I underwrite with 10%, maximum. So never less than 10% occupancy. During COVID, it never hit less than 93%. If you look at all the properties, and as you know, most of our properties have been doing, 98, 97, and running like pro forma.
Right. Well, listen, bottom line is, if you are looking at real estate in the next decade and you're not paying attention to Dallas, then you are missing the boat. Dante, when are we going to have, when are we going to see some more action from Turo, man? People keep asking me about it. I keep telling them my acquisition partner is not finding anything yet.
We're finding. We're just being outbid. So we take pride on delivering. Constant and high returns to our investors, and it's been tough. And and maybe this is something that we need to prepare the investors that probably the expectation of returns are going to be lower than the deals that we have done in the past, just because of the amount.
At least the cash on cash returns.
Correct. The cash on cash return, we would not find anything like we've done in the past of getting 10% plus, getting double digit in the FW. But you invest in a very strong market, a very stable market, like you said, that has continued growth in population and employment. So, where else can you go and get 7 or 8% cash on your money? There is no other place to do that safely. Yeah. So, that's kind of the trend that I see moving forward as we're looking, at our business plan and how we operate. Is just, the market has changed for the better, but has got a little more expensive, and that's the price to pay to stay in the game.
Yeah, and it will keep getting expensive. So anyway, Dante, I want to thank you again for being on Wealth Formula Podcast, and we will we'll have you again probably in the next quarter to check in again.
Sounds good, Buck. Thank you so much for the opportunity. Always great talking to you.
We'll be right back. Welcome back to the show, everyone. Hope you enjoyed it. And if you haven't figured it out yet, Dallas is indeed my favorite market to invest in. And multifamily real estate and working class is my favorite asset to invest in. So the combination of the two, well, that's my favorite thing to do, invest in multifamily in Dallas. And that's what we do a lot of in our accredited investor group. If you're interested in joining that and you're already an accredited investor and you want to find out what's going on and learn about deal flow, make sure you go to wealthformula.com, sign up for our accredited investor club, go through that whole process, onboarding process of your accredited investor status. Anyway, I am wishing those of you in Dallas-Fort Worth the best. Sorry this happened to you, but the good news is you live in a fantastic market, and you'll get through this. And if you own real estate out there, you're going to do really well in the next few years. Looking forward to our next meetup, too, which will probably be in Dallas once COVID is over. That's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, Consult your own financial team before making any investment. See you next time.